What I'm sort of keen to explore here is from a private equity perspective, which is very different from another panel we're going to run later on today, which is from a smaller startup sort of funding perspective, is how you view the online marketplaces world. Now let's sort of start with Stephen, with you and Apex Partners. Can you just give a bit of an overview of the business and then the sort of marketplaces that you invest in?
Yeah, of course. So Apex probably looks fairly similar to EQT, but is a large stage or late stage buyout fund. So typically we're investing in mature marketplaces, trying to put equity checks to work north of $500 million, just to give you a sense of scale. And I've been there now for 12 years, spend 90% of my time looking at online marketplaces. We've done 12 deals, put $3.5 billion in capital to work, and made quite good returns on those, which we don't need to get into today. But it is a sense of scale. We're looking for larger, primarily motors and property marketplaces across the globe. But we've done things like Trade Me or Baltics Classifieds Group, which are more of a mixed model with jobs and horizontals as well. But looking for mature businesses, strong, stable cash flows. But really for us, some sort of alpha we can create, either from our history investing in the space, our knowledge of it, just looking at the business, helping them go through a transition. So our early investments in the space were Auto Trader in the UK and Auto Trader in Canada, both of which were a print to digital transition, that they were looking for somebody with digital expertise to come in and sort of help see them through that we were able to do. Now that shifted more from print to digital to mobile, and from digital to mobile to the transaction. So just as we're seeing these businesses evolve, even for later stage businesses, helping them to come in and really make that jump.
And how small do your transactions? You said sort of around 500. Do you go below 500, or sort of that's like the internal cutoff?
So we've done things as small as, I think the smallest one we've done is we invested in Boats Group, which is actually based around here in Brickell, but it's the leading online marketplace in North America and Europe for marine vehicles. That was a $225 million transaction that we did, but it scales a little bit in, if we think it's an amazing opportunity, and on the return side, you think you can make 3 or 4x on the deal, you're willing to write a smaller check. If you think you'll probably make 2 or 3x, that goes up a little bit. So it's probably a 350 minimum if you push us.
Okay, understand. And Felix, from your perspective, how does EQT view the world?
Yeah, no, absolutely. I mean, I said also similar to Steve, right, on the buyout side. So I think the checks we are writing are also like similar in size. But we actually also have a growth fund and a venture fund. So I think the beauty of that is that we can really invest in all types of companies along the full life cycle, right? So I think our venture fund can go as small as 2 million, where I think our growth fund, I think sweet spot is starting from 50 million and upwards. And then I think on the buyout, we are similar to Apex. And I think, obviously, online classifieds is a big part of our strategy within kind of the broader, we call it consumer internet, right? But I think besides online classifieds, we also like to invest, for example, in online price comparison businesses. We have done an acquisition a few years ago in Italy where we backed the leading online price comparison business called Facile. Or, for example, now from our growth fund, we have invested into a Vinted, which is a second-hand clothing marketplace, right? We have done food delivery more on the venture side, right, with Volt, where we have been one of the first investors and now sold it, I think, to DoorDash. And then actually on the online classified side, we have also partnered with Apex and the colleagues of Steve in Europe with Idealista and Casa.it. So I would say we really look into kind of a broad area of marketplaces globally, right? Obviously, we have a Swedish heritage, but we really have now offices all over the world, and obviously have a lot of stuff done out of Europe, but obviously also now increasingly focusing on North America and Asia.
So what is it that you like about these marketplace businesses? What is it that excites you to deploy $500 million into one of these businesses? What is the fundamental thing that you look for? Stephen, maybe you go first.
Yeah, I mean, at the very highest level, right, in our view, online classifieds are just fantastic businesses. If you stack them up against, software investments, against other types of companies you can invest in, they provide mission-critical products they're differentiated, they're supported by network effects, strong subscription revenues that you can forecast and sort of get behind over a longer term. And then they have secular tailwinds behind them. Historically, it was probably more as just everything's pushing online, but now it's as more parts of the transaction, et cetera, are completed online. There's a strong growth trajectory behind them. So you look at it, and I like to refer to it as the number one criteria in our investments are: is this a house with good bones? Which all my UK colleagues will tell me is not an expression, but it's something we say in the US. But fundamentally, is it a high-quality business to begin with? And then within there, you start to look at the macro conditions in the market they operate in, or the micro conditions of the business themselves. But, at its core is a subscription, network effect boosted monopoly business. These are fantastic places to put your money.
Okay.
And Felix? I mean, to add, right, and I fully agree to what Steve just said. It's really we like to really back market leaders within each market or vertical and so on, right? Like, we typically really look into, for example, in Vinted, right, it's the clear market leader in Europe within that space they're operating in, and I think that's a key criteria for us, because as Steve also mentioned, right, these businesses really follow network characteristics, right? So whatever we look at, I think we really identify, okay, how or what's the market position of that specific investment or player, right? And how defensive is it also, right, with regards to disruption or other potential macro areas. And I think now also with COVID, we have seen an acceleration towards kind of the digital channel. And I think there's still like some room to go. Obviously, in some markets, you see now kind of levels saturating, right? But I think there's still ample growth for these type of businesses.
So, and when you look at the successful investments that you've done, the ones that you alluded to before that you smiled quite happily at, okay? The question is, when you look at those, what are the characteristics that in hindsight you go, yeah, that's what made it successful? Is it the people? Is it the underlying, the bones of the business and the tailwinds of the market? Was it the pre-existing market position? What were the 2 or 3 characteristics that sort of consistently help identify strong businesses?
Yeah, for us, I might say there tends to be common themes in all of the investments we made. And those common themes probably start with the market position of the business, as Felix said. Are they number one? Where do they play? Are there the right tailwinds necessary in that market to help support growth? But then I think that you can have a fantastic business doing that. You pay a full price for, and it leads to an okay return. Where you really can be successful and where we've had great investments is when you're looking, take Boats Group, for example. It was a company that we carved out of regional print publication business in Norfolk, Virginia. Absolutely dominant, 12 times the traffic of their next closest competitor, deliver north of 50% of the leads to every boat deal in the US. Fundamentally mispriced and not managed like it was a business, like it was a digital business. So by identifying that market position, but also the deltas between what they were doing in best practices, we were able to carve it out, bring in a new management team, invest heavily in the technology so we could drive more value to all parts of the ecosystem, and then do what we needed to on the pricing side to make sure we were capturing our fair share of that value. But it's sort of the combination of those factors that, if we're looking at something, gets us super excited about it, versus looking at if we look at REA, which you know well, Simon, fantastic business, run very well, priced very well. A little less attractive for us than something that
there's got to be inbuilt upside.
There needs to be some alpha creation within it, which we can provide via our network, via our experience, or some of the tech experts.
I'm going to ask the same question for you in a second, but when you think about the value you bring to these businesses, there's always there's the network, there's all this sort of stuff, but when you look back, because I think looking back is always a healthy thing to do, is it the changing of management, or is it the stimulation of the management through incentives, or is it injecting maybe a different business model? What is one of the 2 things that really release a lot of value?
Yeah, I'd say from our experience, probably the 2 things that under our ownership really help management or have to accelerate things is one, just an intense ability to focus. So we often buy businesses that are doing 38 different things, right? When really there are 2 things that drive value. Yeah. And not being a public company, working under private ownership, sort of having intense alignment at the board level can really help you focus on those things. And the second is also just under our ownership, we're willing to go backwards to go forwards. So if you need to invest in the technology platform, if for Auto Trader Canada, we quadrupled their marketing budget the first year because they needed to do that. They were losing share. You have the flexibility to make the decisions you need, and you're focused on the things that matter, which I think aligns everybody sort of in the same direction.
Yes. So you remove the distractions, you put the right people in place if they're not already in place, and it's about then focusing. Which if you when you refer to REA, if I go back and think about what created the real value, what created the real value was the capacity to focus on in that case it was selling subscriptions, right? It was getting the market signed up, and then over time you're then able to leverage that market power. And then what didn't add value but was incredibly exciting was all the other stuff all the bright shiny lights that you get sort of distracted.
There's a lot of shiny objects you can go and chase.
Oh yeah, way too many. So Felix, from your perspective, how do you see those sort of characteristics of success?
Exactly. So I think to add here a bit, right, and I don't want to repeat everything. I think one key benefit, right, of having like a private equity ownership is that, we typically invest in companies for, call it, 4 to 6 years, right? So there's no short-term need to kind of boost profits or boost revenue growth, right? So when I looked at our successful investments, really like we don't shy away from doing investments, being into it, technology or marketing or whatever type of form, right? Because I think at the end of the day, what matters for us is really the long-term success of the company and not necessarily what do you get out in the short term, right? So I think for us, monetization, yes, it has to come, right? And you want to grow the business, but ultimately we are not trying to kind of boost something in the short term, right? And I think ultimately when you make investments into marketing or technology, maybe in the first few months or years, maybe you even dilute yourself, right? But in the long term, I think that leads to success. And I think that's when I look at our successful businesses, right? I think that's probably the common characteristic I see across. And in terms of how we add value, right? What we always say is we invest in very good businesses and try to make them even better, right, or great. And I think, we always look at management teams, and we always want to back the existing management teams. So we typically, I would say, invest into kind of strong management teams and obviously give them the room and space to operate. And I think what we typically do is, for example, in our boards, it's not that the board is full of EQT people. So typically we have one person from EQT in the board. But then we also add so-called industrial advisors into the board. So we have people from the industry who basically then are part of the board and obviously EQT nominees. But we believe that this type of governance model enables management really to have kind of a sounding board from the industry to kind of test ideas and so on. So I think that's one of the key things we do with regards to kind of management and governance models.
And when you mentioned Casa before, right?
Yeah.
Okay. Not the market leader.
Not the market leader.
No. So when you take, so it's not always about market leadership as being a criteria.
Yeah.
So what was it you saw in that? And I know Casa because we used to own it, right? What is it you see in that asset?
Yeah.
Is it that and clearly don't get into specifics, but in general, that was attractive to you.
Casa was not a standalone investment for us, right? So I think obviously we invested into Idealista, which was previously owned by Apex, and Apex then also reinvested. So we're still partnering with Apex, who are one of the best classifieds investors in the world probably. And with Casa specifically, obviously with Idealista being kind of the leading portal in Southern Europe, right? We wanted to obviously strengthen their footprint in Italy, and obviously we know Oakley Capital, which was the owner of Casa and now is also part of the Idealista investor setup. We knew them and had basically opportunity to invest in both Idealista and Casa simultaneously, and basically with combining forces, we now have the possibility, and the Idealista team is executing upon, to kind of create a unique bundled product in Italy, which brings a huge value to agents and allows agents to basically tap into both platforms simultaneously, right, and generate much more leads than they did previously.
Okay, which makes a lot of sense. Now, if we look around the world today, the one thing that's quite obvious is the markets are getting hammered, right? As an understatement, everything's down from probably February this year. No, even last year. Yeah. February last year highs. They're 50% off. How do you two parts of the question. One is, how do you think about your investments that you may have made around February last year, and how do you think about them in this current market environment? And then secondly, how do you think about the businesses you're looking at today, and how do you rethink that pricing level? Perhaps Felix, you want to crack at that first?
I mean, when we invest in these type of businesses, right, we typically look at really long-term evolution of valuations, right? So be it 10 years or sometimes even longer, right? And I think how we think about it, right, and we're having a lot of internal debate now on this topic, not just within classifieds or marketplaces, but really in the broader tech sector. And I mean, how I see it is really that probably the last 2 years were somewhat kind of a super high, right? So if you look at the pre-COVID period, actually we are not that far off, right? So I think, and therefore I think also when we underwrote investments over the last few years, given we have always taken kind of a long-term view, I think we are well equipped, right? And yes, valuations have come down, right? And I think we don't know where the world will move over the next few years or months, right? But given we have fortunately taken a long-term view, I think we are quite prone towards that. And then let me maybe add one additional point, because obviously right now also in the inflation environment, I personally think that these type of businesses are really well equipped to pass on basically the inflation environment to the end customer, right? Which is another beauty, I think, of the business. So I think when comparing marketplaces to some of the other sectors, I think it's a sector which is relatively prone and prone towards kind of inflationary shocks.
Okay. And from your perspective?
I honestly, I would agree with a lot of that. The truth is, over the last 2 years, as valuations have exploded, private equity has been priced out of a lot of online marketplaces because you don't need to create EBITDA. It's revenue growth at all costs. Jump into the public markets, find a VC. Valuations have been absurd. So, we invested in Car Global in the U.S., which is a B2B auto business, in May of 2020 during COVID. Since then, we haven't done another online classified investment because versus the long-term averages and what we thought the intrinsic value of a lot of these businesses were, there just wasn't a whole lot of overlap. With the recent corrections, I think you're now finding sort of markets come back to reality a little bit, which is creating more opportunity, more overlap for guys like EQT or guys like us, who, as businesses realize, it could be good to turn a profit. Again, there's private equity there to help support them.
Yeah, which makes a lot of sense. Can we bring up, sorry, Bruce, can we bring up Slido just so it's in the background here for people to ask some questions? What I'm interested now to discuss is how do you see the future of marketplaces? What is it that you're looking for today, or when you're talking to your investments, how are you encouraging them to think about the future? Who would like to go first?
I'm happy to take a stab at it, and we could go.
Remember, there's no right or wrong answer in this one.
Honestly, it may be a little controversial for this conference. I think we don't believe in the iBuyer model. We don't believe in the iDealer model, right? We think it's perfectly fine to own the marketplace and be the arms dealer to the auto dealers who want to buy your digital tools, to the real estate agents who want to find the way to complete that transaction. And that hasn't even either been proven right or wrong yet. I think that's generally the approach we're taking with our portfolio companies as we look at investments. That it's very much around what differentiates you, what provides a ton of value to these businesses, and it's having the completeness of inventory, it's having those network effects, and then using that platform, yes, to get deeper into the transaction, but not necessarily to take on inventory risk, not necessarily to be at the bottom of the funnel. And so as we're looking at new investments or the existing ones, that's kind of where we're pushing. Do you have the right tech platform? Do you have the right data? Do you have the scientists, the technology, all of those things to enable you to take these next steps and empower your customers? Because we view that as kind of a win-win that you'll get paid for over time. Or are you not set up to do that well, either because of market factors or micro factors? And then that's definitely a consideration or potentially an opportunity for us.
Okay, and Felix.
Yeah, no, I think to add to that, right, I fully agree with that, and I think how we think about it is ultimately, if you look at the whole real estate transaction value chain, right, you're monetizing one part of it, and I think there's still ample of other opportunities, right? Be it mortgages, be it seller leads, be it, I think yesterday we talked about consumer monetization, right? And I think, yes, maybe going into the transaction could be one possible path, right? But I think there are other much lower hanging fruits which you can tap into first, right? And thereby kind of grow your business.
I think the interesting trade-off there is if you go into the transaction, you're relying on a high volume, low margin game versus running the marketplace, which is a lower revenue, but much higher margin.
It's also subscription versus transaction.
Yes, which means
Right,
there's a much higher degree of predictability in your, as you said before, in your forecasting type models. A couple of questions going through which I think are quite interesting to explore. Why don't you believe, because I want to follow up on your view about the iBuyer and the idealer stuff, because I think that's quite, I think it's going to be very hard to find someone who believes a lot in the iBuyer model, given what we've seen happen with Zillow. We know there are different ways of executing it, but what is it that you don't feel so compelled by the iBuyer or idea model?
Yeah, I mean, maybe I'll focus more on iDealer since iBuyer probably has more, I have more support for. But on the iDealer side, I'm probably the only guy in this room who's turned down investing in Carvana 3 times, which made me look at like an absolute moron last September. Probably still not that intelligent today, but it fundamentally comes from a belief that the U.S. auto dealer base is more savvy than people will think. These tend to be larger groups. They have massive IT budgets. I was talking earlier, if you compare them to Germany, right, these are much, much bigger businesses that are much, much more sophisticated and have a lot of the benefits of scale that you think you're getting from a Carvana or someone like that. And basically what you're doing on top of that is assuming I can be smarter with my data to pick up more cars at marginal cost, take the recon, take the transportation costs, add all of those into the system, and then figure out how to properly allocate those while spending, in the UK, 25% of all ad spend was on Sync and Kazoo. At one point, we're spending this massive marketing budget. I think it's just the level of scale you need to get to make those economics work versus what's inherently a very competitive and actually pretty savvy but super low margin market, just isn't attractive to me versus, if you're auto trader in the UK and you have 75% EBITDA margins, a subscription business that grows at 10% and sort of, no threats on the horizon.
And to add maybe one thing, right? Like I think private equity typically doesn't like kind of capital-intense businesses, right? And
yes,
I mean, and that's the beauty about classifieds, right? Like I mean, basically your cash conversion, right? So essentially CapEx is close to zero, right? D&A is close to zero. So ultimately your cash generation is huge, right? While when looking at iBuyer, then you also get into kind of inflationary risks. I mean, yesterday we had the interesting presentation, right? And I think that's something we as private equity, which typically is very downside focused, that doesn't really like.
Yes. Felix, for you.
I see.
Top question. Having number 2 and 3 in a company in a country, sorry, how do you split the investment budget to reach number 1? Is it all on number 2 and merge?
No, I mean,
3,
look,
or
I
do you
cannot
think
go
about it?
here into specifics, right? But I think our strategy in Italy, right, with regards to Idealista and Casa is obviously we have both brands, right? Because I think each brand has its kind of unique characteristics and also unique kind of audience, right? And I think we are obviously pushing both brands, meaning we are investing in marketing in both, right? So I think that's kind of our strategy here.
Okay. I'm not going to, well, I can guarantee you won't give me the answer to number 1. Are you going to IPO or not? I mean, I think probably at this point in time and in this market, the answer would be no.
No, I mean, with regards to that question, right? So I think, we typically invest 4 to 6 years, right? And I think we really like being invested in Idealista, and I think it's a great company to be invested in. And look, I think all exit paths are open, right? So at the end of the day, it's nothing we are now considering. I think we are really now supporting management in executing their strategy, obviously in Italy, but also in Spain and Portugal, right, where we are the clear number 1 market leader, and then also tapping into additional adjacent revenue pools. So really focus now on value creation.
And I would assume the answer, do you think you can reach leadership in Italy, would have to be a yes.
And I mean, also if you look now, I mean, I don't know if you can check on SimilarWeb and so on, right? Like I think we are significantly now gaming up our game there, and I think our kind of bundle strategy in Italy is now really like accelerating and then showing kind of very strong results in it.
It would be actually quite an interesting long-term case study, the Italian market, where if people don't realize that if you go back to 2006, Casa was the leader, with Immobiliare, was actually called something else at that point in time, I don't remember what it was called. Way distance in the nowhere, and then they came up, they actually knocked off Casa because Casa fell asleep at the wheel, and now it seems that the worm is turning again in this whole process, which does demonstrate that leadership of a market is not absolute forever, and that you must continue to innovate your business model around that. Speaking of which, I'd love your perspective, because you guys are looking at investments all around the place and so on. What are your views on what we talked about before, crypto, metaverse, blockchain, and so on? Do you have any sort of perspectives on that?
I am so far from qualified to answer where I think that's going. I would say we're generally, skeptical on crypto. I think Jonathan put it right yesterday, where blockchain is a solution in search of a problem at this point. So could it be something you can build into the marketplace as you get deeper into the transaction, do those tools, et cetera? I could 100% see that. I'm also, quite aware of the fact that in a lot of our markets, we're still trying to convince people that print is not a viable place to spend ad dollars. And so talking those real estate agents onto the blockchain seems like it may be a bit out.
A bit of a stretch? Yeah. And from an EQT perspective?
Yeah, nothing really to add. I'm also probably not the expert here. So
no, it's not about I was less worried about being the expert on it and more about how does it sit on your radar, right? Because when you're looking at the future things, there's stuff that you can touch, which is what you've got today. There's what you can sort of see coming down the pipe, and then there's the noise that's out there in the future. So that's what's behind the question, is how do you then think about that, and then how much time do you spend trying to bring that future closer to today, and then ensure that you have your leadership, or maybe even take your number 2 to number 1 by leveraging it.
Yeah, we've spent very little time at any of our portfolio companies ever talking about crypto. Blockchain probably comes up in more of a how do you future-proof the business? Hey, I've heard about this cool tool. Is there a way we can incorporate them into our network, or sort of make that available to people on here? But it's even in terms of future-proofing, it seems like it's a ways out from the discussions I've had.
And I assume the metaverse doesn't turn up too often in conversations.
Not all that frequently.
Okay, then let's do one more question. How do you see more cross-border consolidation of real estate portals?
Yeah, I think from my perspective, I'm not a big believer of it, because I think in terms of hard synergies, I think it's very, very limited, right? Mm-hmm. And so therefore, I'm probably not a big believer of it. I think there's some benefit if you think more from a capital market story. Let's say, when you look at a stock like Adevinta, right, that you can de-risk maybe the underlying market, right, by not just being exposed to not just the German housing market, but rather different verticals and different countries, right? But I think if really kind of doing cross-border M&A to kind of realize cost synergies, I'm not really a big believer in.
Yeah. Having been through it, I can tell you, it's not worth it. I think at the end of the day, real estate more than anything is local.
Yep. Yeah.
And in fact, it's actually more local than even a portal operating countrywide is really operating a lot of micro markets. Yeah. That happens to be aggregated on one platform.
See that with Zillow having Street Easy in New York.
Yes.
It's literally a one city rental app.
Yeah.
Right, which has tremendous network effects, but it is very, very hyper-local.
Yeah, and it's very hard to get that cross-pollination of anything more than maybe a bit of technology at the underlying. The marketing you're not going to benefit out of, and sales, forget it, because agents are local by definition. Thank you very much. I think it's fascinating to understand how the PE world thinks about marketplaces. I guess when you're placing $500 million bets, okay, it's not much of a bet. It's really investing in the future and really helping them accelerate their growth. So thank you very much, Felix and Stephen, for taking the time to talk about how Apax and EQT view the world.
Thank you.
Thank you.
Thank you.